better understanding of how to correct your W-4. So this is the W-4 calculator training. So with the W-4 calculator, it's used to protect against having too little tax withheld and facing an unexpected tax bill or penalty at tax time next year. So the average refund is $3,000. So you may prefer to have less tax withheld up front and receive more in your paycheck, which is what my econ recommends. So we know, we've heard all the stories out there of people, waiting for tax time, waiting to get their refund check so that, they can have that money and spend it on whatever it is that they want to spend it on. But we show people how you can get your money up front. So you don't have to give the government a loan all throughout the year to get your money back. You can be getting your money back every month in your paycheck. So a disclaimer, my econ does not guarantee you will receive an increase in your check by adjusting your W-4 form. So results will vary based on each individual's unique financial situation. So it just depends on how much money you're getting taken out. That's going to determine how much money you can get back in each check. So for this particular example, the family we're going to do is the Johnson family. So their family status is married filing jointly. The household income is 105,000. The husband makes 50,000. The wife makes 55. And they have two dependents, ages 7 and 10, and child care expenses for the year is $6,500. So these are numbers that it will be good to keep in mind to remember because we're going to need them later on in the presentation. So the required information for the W-4 calculator, this is very important. Anytime that you're going to go through this calculator with an individual, make sure that they have their most recent pay stub because that's what we're going to be referring to get the information. And so you get that pay stub, so you have that ready. And like we said earlier, Robert Johnson, he's making $50,000 a year. Kim Johnson, she's making 55. So to get to the tax withholding estimator, all you have to do is type in W-4 calculator in Google. And once you type that in, you'll just select the one that says tax withholding estimator, Internal Revenue Service. Once you click on that, the page should look something similar to this. You can look at, the recent tax law changes and get familiarized with that. And then whenever you're ready, you just go down to the bottom and click use the tax withholding estimator. So for this particular example, when it comes to the filing status, what filing status we use for your tax return? For this example, it's going to be married filing jointly. And then it's going to ask, may another taxpayer claim you as a dependent on their tax return? For this particular example, it's going to be no. Next, the Johnsons will be claiming 2 children as their dependents on their tax return. So when it asks, do you plan to claim dependents on your tax return? We're going to say yes. How many dependents do you anticipate claiming on your tax return? Remember, there's 2 children. And so when we get down to 3 or 5, do you or will you or your spouse hold a job this year with paychecks from which federal income tax is regularly withheld? So for this, it's going to be yes. And how many jobs do you expect to hold for the year? Is going to be 1. How many jobs does your spouse expect to hold for the year? That's going to be 1 as well. And then lastly, will you or your spouse receive income from a pension this year? For this particular example, is going to be no. So also, these other items don't pertain to the Johnson family, so they do not have any other sources of income and tax payments, and they do not fit any of the demographics listed. So we'll go to the next section. Next, income and withholdings. So pretty much you enter in your income and withholding for each job and or pension you will earn income from this year. Each job should be entered separately. So the order in which you enter them does not matter. So do you expect to hold a job for the entire year? You're going to select yes. How frequently are you paid? So for this particular example is twice monthly, but like I said, it's going to vary from individual to individual. Some people might get paid once a week. Some people might get paid bi-weekly. Some people might get paid twice monthly, and some people might even get paid monthly. So whatever that is, that's what you put in that field to get the most accurate numbers. And then on what date did your most recent pay period end? And so you'll get this information from the pay stub that you have of the individual. And for this particular example, it was February 19th, 2021. And so now you want to enter in the total wages you expect to receive for the year. So we're going to start out with Mr. Johnson. So we're going to put 50,000. And when it comes to any bonuses, we're not going to fill out that information. So we'll go skip down to the year to date. And so using your last pay statement, enter the federal income taxes withheld. So for this particular example, it's 524. And then for the pay period, it was 131. And again, we get these numbers from the pay stub. And so did you or will you contribute to a tax deferred retirement plan such as a 401k? It's going to be no. And did you or will you contribute to a HSA, FSA, pre-tax child care credit account or other cafeteria plan? It's going to be no. So now we're going to go to the spouse. Does your spouse expect to hold this job all year? I'm going to say yes. She also gets paid twice monthly. The most recent date that the pay period ended was 2/19/2021. And then you're going to enter 55,000 for her wages for the year. And she also did not receive any bonuses. So also, like I said, you look back at that last pay statement, you enter in the federal income taxes withheld year to date. For her is 624, and then federal taxes withheld for the pay period is going to be 156. So that's what we're going to put in that blank. So did your spouse contribute to a tax deferred retirement plan such as a 401k? No. Did your spouse contribute to an HSA, FSA, pre-tax child care credit account or other cafeteria plan? That's also going to be no. So now we're going to get to adjustments to income. So adjustments to income are adjustments that will have a significant impact to your tax obligation. And so it asks, do you want to go to the next step without including adjustments, or would you like to see possible adjustments? So we want to see the possible adjustments. And so the Johnsons do not have health savings, account deductions, or moving expenses, alimony paid, penalty for early withdrawal, or business credits. So we're not going to put anything in these fields, but we just wanted to see. And so now we're going to deductions from income. So in most cases, it's going to be better if you take the standard deduction. So in this case, the Johnsons qualify for the standard deduction of $25,100. And the Johnsons family does not have more than $25,100 in itemized deductions. So the Johnsons will take the standard deduction. So the only time that it will make sense to go with the itemized is if it's more than the standard deduction. So in this particular case, the standard deduction was best for the Johnsons. So going to the tax credits, based on your inputs, you qualify for tax credits for your dependents. Tax credits are amounts you subtract directly from your tax obligation. So do you want to learn more or finish and get your results without tax credits? So with this being said, we want to see tax credits. Also, we go down to the child and dependent related section, and it says enter number of qualifying children under 17. So we had 2 children under 17. It also says child independent care tax credit. Select the number of qualifying persons. This was also 2. So enter an estimate of your work-related child and dependent care expenses. And remember that first slide, it says we have $6,500 in child care expenses throughout the year. So that's what we're going to put in that blank. And the other sections, the earned income tax credit, that doesn't apply to the Johnsons. And also the adoption tax credit, that doesn't apply to the Johnsons as well. Also, the elderly or disabled, the business, alternative minimum tax, and energy efficient vehicles, all these things do not apply to them as well. So we just move forward. So after we've input all of this information, we'll get our results. And as you can see in the results, the Johnsons will have a tax obligation of $3,393. So the Johnsons will pay $6,888 in taxes, and they will overpay by $2,895, meaning they'll get a refund of $2,895 with their estimator currently constructed. So the Johnsons, they learn about the advantages of investing, owning a home-based business. So they decide to invest $2,895 into their 401k. So when it asks, do you or will you contribute to a tax-deferred retirement plan such as a 401k? Now we're going to enter yes. How much do you anticipate contributing per year? So that's going to be $2,895. And then this last question does it ask, did you or will you contribute to an HSA, FSA pre-tax child care credit account other than or other cafeteria plan? We're going to say no for that section. So we're going to check out the adjustments to income. We're going to see that and see if there's any other adjustments. And as you can see, there's nothing that we can put in most of the fields until we get down to the certain business credits for reservists, performing artists, and fee-based government officials. So the reason why they put information there, the Johnsons learned about the advantages of a home-based business and decided to get started with MyEcon. And so the Johnsons estimate they will have $5,000 in Schedule C business losses. So that's why we put the 5,000 there. So with those adjustments, investing into the 401k and starting the business with MyEcon and having those adjustments, you can see now the Johnsons now have a tax obligation of $3,045, and the Johnsons picked up an extra $948 by making these two changes. So as you can see, they have a bigger refund now. So now their refund is $3,843 coming back into their pocket. So not only were they, able to adjust their W4 and stuff like that, get more money back up front, but you're also able to get a bigger refund. And so, in conclusion, because the Johnsons learned how to income shift with the two simple strategies, they improved their finances in three ways. So the Johnsons redirected their tax overpayment into their 401k. Mr. Johnson's employer matched the 401k dollar for dollar, and investing into their 401k and starting a business lowered their taxes by $948. So in total, they were able to income shift $6,738, you guys. So that concludes my presentation. That's how we're able to income shift and create more cash flow for ourselves. And like I said, once you're going through the process of entering in the information, it's going to be totally based on the individual that you're dealing with. And you're going to get most of the answers from your pay stub. But I can now open the floor for any questions, any comments.